So, what's in your wallet? I've always wanted to say that. We all have likes and dislikes, and I love that. Many people don't like to go to the doctor, and many people don't like to talk about eating more healthy. Well, today we're going to talk about something that gives people almost the same reaction as a heart attack, your credit score. Just like your health, your credit score has a blood pressure. We're going to call that credit pressure. Because in my world, a heart attack is called a rate attack. That's what happens when you hear what your interest rate is compared to someone with a higher credit score. A low credit score can cause a higher down payment, more documentation required, a higher monthly payment for mortgage insurance, etc., etc. And you can now see why not only your blood pressure goes up, but how this can be compared to what I call credit pressure. The higher the credit score, the better the interest rate. The more opportunities for a low down payment assistance, and many opportunities arise with a good credit score for the credit achievers. You are what you eat, or your credit score is what you fed your credit. If you max out your credit every single month, you're going to feel the belly aches in your credit score. You can feel like your spending totally is fine. After all, you still keep getting credit offers. Your credit, it looks fine. Then one day, boom, your credit score says this number is not fine. That's what happens when people apply for a mortgage and suddenly realize their credit pressure is through the roof. Why your credit matters? Your credit score affects everything. So when people say it's only a few points, those few points can be the difference between a calm closing and a full-blown rate attack. Now, here's the most important thing I want people to understand about credit, and this is education. I am not fixing credit. Your credit score cares a lot about ratios. A ratio is how much of your available credit you're currently using. Currently using. If you have a $10,000 limit and you're using $8,000, you think you're fine because you're staying within the limit. But this increases credit pressure and you get a lower score. The funny thing about credit is they want to give people credit because they want you to use it. They make a lot of money off us utilizing the credit. But if you want to keep a high credit score, you should only use about 29% of the credit you've been given. For some reason, that's the magic number. So that $10,000 credit limit card should have a balance below 2,900 when the bureaus report every single month. What? I earn points off that card. I use it to pay my insurance, my groceries, etc. I use it to take my family on vacation every year. Credit card points can be amazing and they have lots of benefits. Keep using your credit card. Spend the whole $10,000 every month, but pay the balance to below 2,900 every month at reporting time. How do you know what day your cards report? Well, each credit card reports to the credit bureaus on a different day, usually about 7 days after your payment is due. This makes it even more tricky because if you pay the balance down every month by the payment due date, but start spending again because you got to earn those points, you may have a higher balance by the time the credit card reports to the credit bureaus, again, taking your score down. So make sure you pay it down again about 7 days after the payment due date and let it sit nice and low for a few days until you get reported, and that will give you the optimal credit score at reporting time. Want to know the fastest way to hurt your score? Have a higher balance report on your credit card, even 1 month. I've seen a credit score drop over 100 points just for 1 month of reporting a higher balance. This is without any late payments and staying within the limit. And here's where people get into trouble. I see this all the time, but I'm going to pay it off next month. I just need to use it for a month. Doesn't matter. Too late. You may need to wait another 30 days until the next reporting time. That high balance statement reports, your ratios spike, your credit pressure shoots up, and suddenly, rate attack. A last important caution is about authorized users. Whether you are on someone else's card or they are on yours. It's a relationship. This one surprises people. When you're an authorized user on someone else's card, you don't just get the benefit, you also get their behavior. So, if they use their card heavily or at a wrong time, it affects your ratios. If they miss a payment, it affects your credit pressure. So, yes, authorized users can help and be very beneficial, but they can also quietly raise your credit pressure without you even knowing it. It's like the silent killer of credit. Try to keep good communication with authorized users if you're preparing to buy a home anytime near in the future. Your credit score is not about drama. It's about discipline and consistency. No easy hacks here, just solid, healthy advice. I guess this is true for almost everything, but it works. Healthy habits build a healthy life, even in credit. I invite you to like and subscribe to learn more. Better yet, just text me your questions. Call me Cindy Chasen, your Florida mortgage advisor and nationwide investor creator. 561 246 9586.